Okay, I'm seeing five people so far. Maybe let's just give it maybe until 15:35, and then maybe we can start. Okay, good afternoon. Good afternoon. I hope we all good. I think those who want to join, maybe they can join us on the way while we are on a presentation. So in fact, this is our first, webinar that we continue, doing this each and every Friday, depending on, how clients are actually, receiving it. If they're excited, then we can continue doing this. The another request in terms of us, I wanted to request that it would be better if you'd have to be something like a conversation that, for example, Mr. Jamel, if you have a question or you want to ask something about the trade, you can be able to ask, then I can stop and I can be able to answer or share whatever that I know so far. So the reason why we starting about this class in terms of entry point, because I do believe that the entry point it's one of the most important when you're actually trading. Of course, it's a beginner class, but I didn't want to, to go on what is trading, how does trading works. I think, those information you can be able to find it online, and, it's just the surface information. But I think entry point, it's a key point, whereby, because once you understand how to enter in a market, then you're going to be able to actually, start making money. The reason why we sign up with a broker and we open an account, the idea is to make money, not to lose money. But in order you to make money, you need to know where you're supposed to enter your trades and where you're supposed to exit, so that you can try to minimize those loss if you're going to be able to, to find a loss. In fact, they always say that once you find a good entry point, you are actually have 70% chances of success with that trade than 30%. But if you don't find a good entry point, you are actually on a 40% successful success in terms of the trade, 60% in terms of the loss, because of you didn't spot a specific of entry point. So when it comes to entry point, there are different types of spot whereby you can, you can be able to identify and to start trading, whether the market is going up, whether the market is going down. You just need to identify those patterns. Once you know those patterns, then you can be able, to try to get, most successful trades than the losses. So when I go to what are those patterns of entry point that we can find, and another thing that I'm going to be doing, once I present, I'm going to jump in, maybe go on a chart and try to find what we are talking about, right? Try to find what we are talking about on a chart, so that we can see that this is what we are talking about. If we find this type of pattern, or this type of candlestick, for example, now that means this is a perfect entry point for us to enter in a market. So when it comes to the types of the entry point, there is a trend channel entry point that you can find the entry point based on the trends, right? The trend of the trend of the trade, and you have to put the trend in a channel to identify the entry point, right? So we're gonna try to do that and to see if we can be able to manage. The second point, it's a breakout entry point. Breakout entry point. What it means is that when the market gets to the space where it has to break even and now take to a different direction or surpass where the market it was before, right? So those are breakouts entry point. It's very, very also important to know it, because it's a different type of entry point than a trend entry point. Again, the reason why also that are different is because of the style of trading that people trade, they are different. So that is why there's all these three type of entry point that you can choose, and according to your style, and be able to trade according to your style. There's people who trade long trades, and there's people who trade short trades. And all these trades, they're not going to be the same when it comes to entry point. The entry point are a little bit different when it comes to longer trades and when it comes to the shorter trades. So the third one, it's a candlestick pattern. The candlestick pattern, it's where you identify the type of candlesticks, and as well as know what type of candlestick it is and what does it do. So it means when you see the specific candlestick, you know this is the type, this is the candlestick is called this name, and this is what it tells us when this candlestick has formed on a chart. So that's a third pattern that you can find as an entry point, a candlestick pattern entry point. So a Forex entry point is the level or a price at which a trader enters into a trade, whether they are buying or selling. Deciding on a Forex entry point can be complex for traders because of the abundance of variable inputs that move the Forex market. So again, although we are looking at the entry point, then it says that there are variable inputs that can affect, these entry point depending on a move of the Forex market. So sometimes it might be a biggest news, right? So when it comes to the bigger news, the volatility of the market is going to be high. The entry point that you can take, it can be, not be correct at that particular time is because of the volatility of the market based on the news. So this entry point, it gives you the majority time when you are trading, because the news doesn't happen every day or every time, right? It can happen for 20 minutes, then it finished, the news is finished, and then after that, the market will continue running accordingly the way it's supposed to run. That's where these entry points, they come in. But when it comes to the news, there's a high impact volatility. We might expect anything can happen. It can be, going against your entry point, can go according to your entry points. I hope so far, so good. I hope if anyone has a question, can be able to
Yusuf,
ask.
I have a quick question. So on the candlestick patterns, right, on the news, that's probably basically your NFP days and your PPI. Those are the big days where the market really moves. Am I correct in saying that?
Yeah. Yes. All right. So is that the question, that the market moves during the NFP?
That's my question. So those are the the
so
volatility
those are the major news that actually market push, the news push the market. Mostly is the NFP, non-farm payroll, and then it comes to CPI, consumer price index, and again it comes to PPI, which is producer price index. And again, these are three biggest news, but there's also the news that comes after that. For example, like a GDP. It can come with GDP from, let's say, for example, Great British Pounds. That means a British pound is going to have a volatility there, is going to have high impact volatility. Depending on the results of the GDP that comes, the market will go based on that result. So, for example, if the GDP numbers are below estimated numbers, that means, that cycle, they didn't reach that specific estimation numbers. Then the Great British Pounds will see it starting declining on a market. That means it will start moving towards to the bearish movement, to the sell position. If the GDP numbers surpass the estimation numbers, then that means the Great British Pound is starting gaining the power, getting the momentum. In that way, we're expecting the British pounds to start going on a bullish movement. So those are type of the news events that happen, and that really not necessarily you can take like a candlestick pattern and identify the entry point through those news event. But most of the time, it's just a free flow trading whereby you can use this trend, the entry points, and be able to spot a specific entry and enter your trades. I hope we're good there. All right. So moving on, Forex entry point. So in that picture, it actually show a little bit of confirmation of candlestick. So these are a type of a candlestick entry point. I don't know, you can see it's even written a hammer candlestick, and it changes the direction of the market. It start going on bullish movement. So the candlestick pattern, our powerful tools used by the traders to look for entry point and the signal for the Forex. Patterns such as engulfing and the shorting star and the frequency used by experienced traders. In example below, the hammer candlestick pattern can be seen as a reversal trigger entry point of Euro USD. So let's keep it scenario that this is a Euro USD. Once we see the hammer, it actually tells us that the market has been exhausted in a bearish movement. It's changing now the position or the direction of the market to the bullish movement, right? Now, what is the confirmation here? Why this candlestick, it looks like this? We're going to try to go on a chart and find the type of candlestick like this so that you can see it on a chart. why it looks like this and gives the signal that this candlestick, it tells us that the market has been changed the direction. If you can look at it, the data of the candlestick, it goes all the way down, and then it pulls the data all the way and close the candlestick above. It closes it a little bit above. There's only small space that you can see. It's on red. That's the collection of the data of the candlestick or of the instrument, right? It only moves in this part, although it goes all the way down and the pull back. So that pullback, it's identifying that exhausting of the movement to that direction. So now it starts changing, now going to a different direction as well. Until this side you see a different pattern, then you can also identify another trend of a movement. So this is one of the example of candlestick pattern entry point that you can identify in a market. So identifying the hammer or any other candlestick pattern does not confirm an entry point into the trade. Entry point are just as important as identifying the candlestick itself, right? So moving on. So a buy, so for example, if we are on a buy trade, and we want to spot, for example, an entry point on a buy trade. So buy entry signal occurs after the appearance of an equal color vertical line. The trade should be triggered after the candlestick close. Set your stop loss below the last swing of low of the market. All right. So here, I'll actually give you the example of the buy trade and where you can be able to get the entry point. But here, I think the main key here is to set the stop loss when you are actually enter the trade in terms of the buy signals or the buy entry point. So for example, let's do this. Okay. So we can try getting the markets. All right, these are one of the examples that we're talking about when it comes to a signal of entry point. You can see these candlesticks. The market tries to push the price all the way down, but it pulls all the way up and close the data above, right? So this is only the space where the data has been collected on this candlestick, only this. What it means is that it fails to break this level, which is the level that it was there on a 16 August, and it failed to break it on a 22. Once it fails to break, it actually identification of the changing of a direction, right? So we can see the market turns here, starting going all the way up. Of course, in a market, we'll find things like a retesting, things like volatility. What we are saying here is the volatility of New York session that just opened at 3:30. Of course, we're going to see the movement, high movement of this volatility. But after 3:30, it will start, taking this. It might come and retest at this position and see if it's going to be able to break going this side. But if it doesn't break, that means this signal is correct as our buy entry point. We might expect the market to continue goes all the way, maybe to 2,530. That's when it comes to, we're looking at gold there. Maybe another instrument that we can look when it comes to entry point. Here's another different type of a pattern of entry point. We can see that the market has been consistently playing around at the same position, right? Without breaking, goes all the way down. That especially if the trend was a bearish trend. So for example, this is, we can call it as a trend entry point, for example. So let me do this. Can set up. Yeah. So what I'm doing is just to form a trend pattern, right? Just trying to put the market in a bracket so that I can be able to see properly where exactly the market is going. So pretty much I can see that the market, it's actually, this trade especially is actually coming from above, and it's on a bearish movement, pushes the price all the way down. But even if we go on a bigger time frame, right, the position where it is on the 21st of August, the last time that it passes that position, it was on the 14th of August. So it hasn't been break to go all the way down since, in fact, not even on the 14th of August, here on a 23rd of July, that's where it breaks come to this side. Since then, there's no any type of market that breaks to this side, and you can see here it confirming this line that it hasn't been breaking, goes to all the way down. So what it means is you're gonna have to find the entry point and or where the market is actually exhausted. So here it tells you that the market has been exhausted. It opened a couple of candlesticks that play around at the same position, that another exhaustion of the market, showing that it's changing the direction of the market. And you can see trends start going on a bullish movement. If you're going on a bigger, smaller time frame, you can see again, goes from here, goes up, come back, but still continue. On a trade, this trade, it's still a bearish trade. On a trend, this trade is still a bullish trade if we look at it on a smaller time frame. So we still, okay. So it might come, maybe retest again at this position, where it retested on July, might come and retest this position, and again change the direction and continue with a bullish trend. So that's actually when it comes to identifying some other, maybe other entry point, like a candlestick entry point, and again a trend entry point. Any questions so far? Mr. Ahmad, are we together? Are we good?
Yeah, we're good, Yusuf.
Okay. All right. I see Mr. Daniel there. Welcome, Mr. Daniel. Although you're a little bit late, but welcome, welcome. All right, moving on. So we are seeing another one. It's a sell trade entry point. A sell trade entry point signal occurs after the appearance of the margin or color vertical line. The trade should be triggered after the candle closes. Set your stop loss above the last swing high of the market. You can take a profit once you trade hits the 1.2 risk to reward ratio. Exit the trade in the case of the arrival of an equal color vertical lines as it focuses as a trend change, right? So we can see on a demonstrated where the trend is changing, but again, it's demonstrating where you can enter and you can exit. You can enter here, you can exit at the bottom there. So as always, to achieve a good result, remember about the proper money management. To be a profitable trader, you need to master a discipline, emotions, and the psychology. It is crucial to know when to trade, but also when to not trade. Avoid trading during unfavorable times and market conditions like a low volume volatility conditions beyond the major sessions and wide spread. So this is also another point where a lot of people lose money in the market is because of wanting to trade everything anytime, every day, right? So it is a challenge for ourselves to be able, that we should learn to be able to hold ourselves to say that, okay, this is not a good time to actually enter the market. But how are we going to identify, you know, a good space to be able to be in a market, right? In order you to identify the good time or good space for you to trade, you need to watch the market all the time. Because if you trade today and you're gonna come back and trade next week, you're not gonna know what is gonna happen, what has been happening for the past 5 days between today and the next week. Right? So even if you are just looking at the market daily and look where the market is going, where it's coming from, and then you can make a decision when to actually trade. Some people, they don't trade, for example, on a volatilities, on a high volatility movement. Like, for example, Mr. Ahmad, you were asking about high impact volatilities. There's some traders, they don't participate exactly when the news is out. So for example, if NFP is happening on 2:30 p.m. on Friday, some traders, they don't take the trades exactly at 2:30. They wait the volatility to come down, maybe until 3 o'clock or 3:30 for an hour, and then they start actually to get in the market. The reason being is that when you are trading during the announcement of the news, now that time you're not trading the news, you're trading the announcement of the news. When you're trading announcement of the news, there's a lot of investors and the traders that are actually waiting. Some of the traders, they pull out their money. So the market, it will be moving up and down, looking for the next position that has a feeds. So if, let's say, for example, a position 200, there's a 200,000 people, they put an order there, and a position 100, there's only 10 people that they put the order. The market will be forced to go to the position of 200 because of that's where there's a lot of people that have feeds. And again, the market is being driven by us because we are the ones who put feeds in the market, which is our money, which is the liquidity that pushes the market. So sometimes people, they'll say that, okay, let's wait for 30 minutes, to see where the market is going, or the market to touch the positions where a lot of people have feeds. Once it's done doing that in 30 minutes or an hour, then the market will start actually, showing the proper direction. Then you can enter your trades, or you can look for entry point. You enter your trade, you trade in peace. In that way, you are actually avoiding emotions. Because once you enter during the high impact, now the emotions is high. You're seeing the candlestick is going up, the following candlestick is going down, the other candlestick is going up. You end up deciding to close the trade. While on the trade, it was the correct trade that you could have been able to make some profit. All right. We only have 10 minutes remaining in terms of our first day sessions. So guys, if you have questions, you can be able, you can stop me and be able to ask any questions. All right. Another input that I wanted to actually, emphasize here, it's a widespread trading during the widespread. Now, how are you going to know that I'm trading during the widespread, right? It's when you to identify that you are trading during the widespread, it is when the supply it's low and the demand is high, right? The supply, when it's low, demand is high, the price of the spread will be widening up. It's not because of the broker, it's because of how the market has been designed and how it is. So when the supply is low, so for example, if you want to trade the instrument from United States dollar, right? From United States, you want to trade United States dollar versus whatever, Japanese yen, or maybe Canadian dollar. Maybe also a bad example. Maybe you want to trade US indices like NASDAQ US 30. And you are trading NASDAQ and US 30 on a signal session around 3:30 a.m. or 2 a.m. That time, there's a few people from United States that are up and doing the business because of their sessions and because of their time zone, right? Now, the demand, it might be high, but the supply, it will be low because of there's no much. So for example, if a NASDAQ is combination of 100 technology companies from United States, and you are trading the time that the companies are closed, they're not doing business, the supply is gonna be low and the demand is gonna be high. That's where the widening of the spread comes. So again, the reason why sometimes we lose in a market, it's actually trading the right instrument in a wrong time, or sometimes trading the wrong instrument in a right time, right? All right. I hope I'm making sense in terms of risk, and be able to be disciplined and emotions, and control our emotions, and again our psychology. Okay, so we talked about the Forex entry point strategy based on a trend channel. So let me just go on and repeat again on a chart. Let's get a clean chart. All right. Let's get a clean chart. Let's say, for example, we get this one. Put it on a bigger time frame, maybe H1. And now we can see our trend from 31 July. It's a bullish trend. So the market has been going all the way up. Okay, some people, they can use this to draw the trend. Let's move it and start it from here. Okay. So what we're actually doing is to put the trend on a channel, right? Now, what you do, you identify the position where the market has break the trend. So for example, right, you can see here there's a candlestick that actually pushes and break this trend and goes all the way up. Identify that position. Another position where I need to identify, I can see here again, the market has tried, wanted to break on this level, but it didn't break, goes all the way down. I'm identifying that. Okay, this is another position. Right. Okay, so pretty much we can see that the market has been on a bullish trend, but here's another hammer candlestick that identifies the entry point of the bearish movement. You can see the other picture, it was looking up. This one, it looks down. Tried to goes all the way up, and it pushed the market, the price down. It closed on a very, very small data, and again it started to push the price all the way down. And this is where the market wanted to try to break, but again I said, once you've seen candlestick play around at the same position for a couple of some time, you must know that it's exhausted of that specific trend, and the trend is starting to change the direction. Look at here, we are seeing a very, very huge candlestick, spiking up, and you look at the signal of the entry point. This is what we call the hammer. If we zoom it, this is the hammer. Looks like a hammer, and that's what it's called. It's called the hammer candlestick. It is the signal that tells you it's a buy trade has been now begun, right? The buy position has been now begun. So that's how you actually, put the market on a channel and be able to identify where you can, if this candlestick goes all the way and close below the trend line, what it means is that the market is continuing with a bearish movement. So then we could have identified this, a different level of take profit, identify another level of stop take profit or stop loss, if it breaks at this level. But now you see it didn't break. I pushed the price up. That's why it started to go on a trade. Look at this. And again, it's going to my position where identifies that it tries to break, but the market comes back. This is where exactly this trade is going. I'm seeing inbox. Kindly send WhatsApp message if you have further. Okay, they're saying if you have further questions, kindly send the WhatsApp. It's on the inbox. There's a number there. 0875503227. So we have 3 minutes to go. Any questions? Now we can do the question. Anything that you guys maybe you want me to show you quickly at this particular time.
So Yusuf, this is the best time to trade your NAS 100 and US 38 is at this time, am I right?
Yeah,
Just when the market's open.
Yes, this is a perfect time to trade. Like you can see, NAS 100. I already enter my buy trade, and you know this is my anticipation, and I'm anticipating the market to go at this level. So pretty much it will go this side. USDT, same thing. I've entered my buy trade. It already goes to my take profit. So for now, I can close my trade and take my profit. I'm good. You know, the reason why this is a perfect time to trade USDT, NAS 100, S&P 500 is because of it's an opening of a New York session. It's the same example that I give of supply and demand. You know, so this is
so
the
basically
supply.
Your European markets. Yeah.
So it's a closing. It's opening of a United States market, not a European market.
No, but I mean the European market, when you'll start in the morning at obviously your 9 o'clock, 8 o'clock time.
Yes.
For those industries.
9 o'clock. Yes, correct. Okay. 9 o'clock it's a European session in the morning, and then from 3:30 it's New York session. Again, time changes depending on on that side, because overseas they use daylight saving.
Daylight saving, yes.
Yeah, and all those stuff. Time changing time to time, but it changes after maybe 3 months, 4 months period. Okay. Thank you, Mr. Ahmad. Anyone else? We still have a minute. Okay. All right. If we don't have any questions, I think that's it. What we prepare you guys for today. But again, if anyone want maybe a one-on-one session, you can always communicate with me, or you can send a text on WhatsApp. You deposit money in your trading account. Once you deposit, you can have one-on-one session with me whatever time that you are available, as long